Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 3rd, 2017. Now to get started this week, we're going to begin where we always do with that all-important US dollar index. Now what we're looking at with the dollar here is some momentum, but we're having a little bit of a problem breaking through this 100.50 level. Now, what I had talked about in last week's Forex Weekly Outlook, that basically based around the intermarket correlations that I showed, I suggested the dollar would strengthen last week. So we had a very violent gap to begin the week, but the dollar did fall into place. The equities rose higher, oil went higher with the US dollar index, and of course with the equities moving higher, that was the trigger, along with gold selling off, that the dollar would rally. So when we're looking at the dollar for the US dollar index next week, or the US dollar in general, we can see that we're trying to form a buy signal here, but we have very little momentum in the market here. And this is my concern, is that the predicted RSI is not breaking above the 60 level. It's starting to move sideways. We do have a trend line break. We have just barely closed above the critical VantagePoint 18-day predicted moving average at 100.12. We're closing at 100.21. So a very mixed bag here with the dollar. Slightly bullish, but I wouldn't get too excited about this one just yet. Now, when we look at the euro and how it relates to that dollar index is very important actually here, guys. We can see that 1.0715, we've closed very bearish 106.53. Now, the lower part of this trend line, I suspect that the euro will start to gain some strength back down around the 106 level, but I believe we do have the non-farm payroll next week, and that could trigger some dollar strength towards the end of the week. And if we get a good payroll number, you're going to see a considerable amount of dollar strength potentially. Now, once again, when we look at the predicted RSI here, we're at 36.7, so it is showing near-term momentum to the downside. So shorts still carry the edge, only while below 107.15 here, guys. If we can get back up above 107.15, then we're probably going to make our way back to 109. But if we can't, again, get above that 107.15 area, we're going to likely target the 106 area, and a break of that area will take us right back, probably fairly quickly, down into the 105 area. Now, US Swiss franc, of course, is the exact same trade here, guys, as the Euro US. One goes up, one goes down. Right now, we are bullish on this. We look at our 6-month trend line coming in at 98, about 98.30. Longs carry the edge while above there, but shorts for now still carrying the edge while above 101.20. Now, massive trend line up here. It continues to hold in 2017, surprisingly, even with the dollar strength. But the critical VantagePoint level, 99.80, we've closed at 1.0025. If we lose this critical 99.80 level, we are probably going to come back down and test the 98 level, excuse me. And at that time, the euro would have held, turned around, and started to rally. Now, with the British pound for next week, an interesting setup here, getting into a very somewhat of a tight wedge formation. My current trend line intersects exactly with the VantagePoint 18-day predicted moving average. So this critical level right here is a very important one at 124.25, because there's a trend line here also. Now, longs carry the edge while we're above this level, but if we lose this level and the VantagePoint 18-day predicted moving average, we are moving lower. Now, interesting signal here again from VantagePoint with that medium term crossing over the long term predicted difference to the downside as the market is moving higher. So we can see as the market's moving higher, the medium term indicator from VantagePoint is suggesting this is just about done. So we had a very big gap here on Monday, which looked very bullish for the British pound as it started to move towards the 126 area, and then it completely and utterly failed. So of course, with my own direct clients, I was warning them ahead of time that we would be selling the British pound US dollar based around this particular signal, and that did come to fruition. So we want to make sure we understand and utilize these critical VantagePoint indicators, because they always give us an early warning sign that something could be wrong. When the market's moving up that aggressively and the VantagePoint indicators are moving down, I would bet on the down. So for next week, the 126 level is going to be 126.20. is the critical level, but we also want to watch this 124.25. A clean break of that, guys, The short will be the easiest trade. Just be very, very cautious on Monday. What I tell my own direct guys is that we wait until we focus our trading Tuesday, Wednesday, Thursday, and part of Friday. Be very, very cautious. Never enter the market on Sunday night. And Monday, be very, very careful. Now, with the dollar-yen pair here, we've got very, very stiff resistance up here at the basically about the 115.80 area. Now, strong trend line support, but as you can see, we're banging up against this critical VantagePoint 18-day predicted moving average at 112.17. We need to break above this area if longs have any kind of chance whatsoever. We further need Basically, we need gold moving lower. That is the intermarket correlation to the yen. Gold moves lower, the yen moves lower, which indirectly means US Japan is going to go higher. So we want to watch gold and we want to watch the global equity markets. Make sure the equities can hold on to those gains, and then longs on dollar yen will be fine. However, with this close of 111.37, that is far less than bullish here, guys. Regardless of what you hear on different websites, yada, 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 the key thing to understand is that this move higher right now appears to be corrective in nature, but if it's going to confirm that we do have fresh longs coming on this pair, then we must break above that all-important VantagePoint level at 112.17. So right now, slight bias to the downside while we're under 112.17. Now, with the US CAD, this pair is going to be very interesting going into next week's trade. What I would watch very closely here, we have a very well-defined range here that basically is coming in pretty much right off of this bar right here. If I take this off just for a moment here so everybody can see it, in my respectful opinion, US Canada is range bound between 132.60 and the 134.20 area. So a break of this level to the downside will be triggered by oil prices continuing to advance, which basically I warned everybody over the last couple of weeks to be prepared for oil prices to go higher. So when we look at this, what this is telling me is that we're potentially, if oil can continue to advance higher, then US Canada, when it takes out the 132.60 level, we want to short this immediately. What most traders won't do is they will not sell low and they will not buy high. Selling low will be a much easier trade if we combine it with that intermarket correlation. Right now, we do have a fresh triple cross from VantagePoint, and the critical level that you really want to watch this week here is 133.46. Selling into this particular area is reasonable with stops above 134.50. If we can break through this level that I've identified right here, then we should advance lower fairly quickly down into the 131 level. So watch for this one because it could be a very good trade next week. Now again, when we draw that trend line in, we can also assess here that we have a very, very tight wedge formation that is building here. And the VantagePoint indicators are already warning us that we're on the outside of this trend line. A fresh triple EMA cross combined with my trend line usually equals a pretty good short trade. Now, when we look at Aussie US, New Zealand US, again, both of these pairs are virtually the same here, guys. They pretty much go up and down together. There's a minor variation, but right now we can see we have pretty solid trend line support at 76. We need to break through this level. You can see the market is going sideways right along the critical VantagePoint 18-day predicted moving average, which currently comes in at 76.35. We've closed at 76.28, so it's not super bearish, guys, here. There could be a long trade right here if the dollar weakens, but we need gold prices rising in order for this to get moving. We can see that our RSI there is very little momentum on this particular pair. That's the first thing I want to point out, but our main indicators from VantagePoint are warning that there could be more downside. So watch that 76.35 area, but if we continue to hold above 76.35 for Monday and Tuesday, then there could be a very, very good potentially a very good long trade here on the latter part of Tuesday and Wednesday and Thursday. Now, pretty much the same applies to New Zealand US. I wouldn't get too excited with this pair either. We are up against a significant trend line here at the 70.50 level, but what we really need here is, again, for us to hold below 70.24. We've closed at 69.99. It's very, very sideways here. If we look at this particular pair, and I draw this in so everybody can see it, once again, we're really just kind of going sideways right along this area here. So we're looking for a break up here or a break down here, and that will target the next bigger move on New Zealand. And again, if it's to the downside, Aussie US is going to follow down also. If it's to the upside, Aussie US is likely to follow also. So the key thing to watch here, guys, be very, very mindful of gold prices. If gold advances higher, Aussie US and New Zealand US will follow.